Welcome back to Money Never Sleeps. We got House with us today. No J Web, but there's a lot of things going on in the market, a lot of head fakes we need to be aware of. All that and much more on today's episode of Money Never Sleeps. Welcome back to Money Never Sleeps. I realized I had said M&S twice in that intro. I'm very unprofessional by doing that. I'm joined today with Mr. House. Before we get into anything, just a reminder that anything we say is not financial advice. We're not financial advisors. We're a couple of young kids that love talking about the market. We enjoy doing the show every day. If you have any type of desire to buy anything in this market or short or do whatever, consult your financial advisor, do your own research. We're not responsible for any of that shit, but we are happy to be here today. House, it's always a pleasure having you when you're on here. There's a lot of stuff we can get into today. What's the number one thing on your minds? And then we can kind of go over some of the important things that we're seeing in this market.
Probably the biggest thing that I've been kind of looking at is, post ETF, we're seeing number go down. And we're starting to see, that the discount on the Grayscale BTC trust was taken advantage of for a while. That's pretty much gone. And, a lot of money was flowing out of there, going into other funds, but, numbers ultimately going down. So, I think this is starting to play out kind of how we imagined it. I think resistance is pretty tough, but I wouldn't be surprised if we saw another leg up before we get that big wave down. But yeah, I think it's interesting. We've got the liquidity ratio of ETH to Bitcoin is pretty much the highest it's been since, I know it got decent in November. And the last time it was that high was when we just saw October. But that's caught up. Bitcoin dominance has been going down. So yeah, I'm looking forward to seeing just the rest of the price action. I opened up a couple shorts right before the show just to see if I can catch some scalps, but I'm not sure how those will do.
Yeah, I mean, these ETFs, this was something that we were going to bring up today on the show, so I'm glad you brought it up. But it's really interesting how the sentiments completely change. I mean, it's the 1 week anniversary of the ETFs going live. Congrats everybody. Since then, we'll take a look later, but we'll see the exact percentage that a lot of the big ones are down. But Bitcoin's having a terrible day today. It's down 1,600 the last time I checked. Almost 1,700 as we speak right now. ETH is down a good $90 or so. It seems like some of the euphoria that the ETF was supposed to bring us to north of 50 is kind of faded, but that's a dangerous thing too. I think we need to watch the funding rates more than anything if we do want to see that that pump to the upside that I think you and I are both anticipating, because I do think that there is going to be a bit of a push up for Bitcoin at some point. I just don't necessarily know how strong the move is going to be, and I think it's going to be met with a lot of supply that's currently sitting on the exchanges, Grayscale. That's pretty much ready to dump on people. There's a lot of distribution I think that's still to come, but I don't necessarily think they want to be distributing as the price is dropping. It makes more sense for them to pump it a little bit, sell from higher. There's going to be, I'm not going to say idiots, but there's definitely going to be people who are going to buy the dip and thinking that we're going to go north of, 50K. I saw some people saying 80K, right before the ETF went live. I was like, money doesn't work that way, but we'll get into it when we look at the charts. There's some other stuff that happened today. I think we need to talk about some of the jobs claims, the initial jobless claims that came out. I'll pull up my screen once again. This is very similar to what we said last week when we got the jobless claims for the week. And it's kind of foo-foo, if you know what I mean, because we're going to look at this and it's seasonally adjusted against non-seasonally adjusted once again. While we look at this, we could see that the initial claims is 187K, down 16,000 from the week prior. Sure, that's great. It's seasonally adjusted. Non-seasonally adjusted, we're looking at 289,000 jobs against 318. That's down about 30,000 or so. So keep an eye on that. So it's definitely came down. But when we look over here to the insured unemployment seasonally adjusted against non-seasonally adjusted, we could see that 18,000 jobless claims were added, right? And so it's really easy to manipulate data to the way that you want it to fit your narrative. And I think the headlines right now are doing a great job with that. I think they did a great job with it when it came to retail sales report yesterday. There was one, I can't remember which website it was. Maybe it was like Reuters or someone like that. But they said that consumers still strong after good holiday season or something like that of spending. And then prior to that, the original headline was like holiday season not as bad as originally feared. So there's definitely a type of narrative that these news organizations are playing. I know that they have these articles ready and these headlines they can change at any point, but when we look at the data, there's a lot more than what you're just reading in the big black bold on these news sites when you open up. And we'll look at a few of them today because there's some that are really interesting, not necessarily related to jobs, but this jobs data, I'm not concerned about it one bit. I think we are still pretty early in seeing any layoffs, any jobless claims continue. We know continuing claims are probably going to remain high, but initial jobless claims, those will probably get impacted even more come earnings season. And we got some of the big boys in the next few weeks. So we'll see how that plays out for retailers and then obviously some of the tech companies, which we know they laid off a lot in 2022, but I don't necessarily think they're done just quite yet with some of those layoffs. So we'll keep an eye on that. Nothing too crazy on that front. Other things that I saw in the news that we should talk about is something we talked about back in October. I think you, me, and Jay were on the show, and I was in like a motel or something like that, and then I had to jump off because the internet was just absolute ass. But Discover Financial was a short that I was talking about a long time ago, and their earnings came out yesterday, and it says Discover's card delinquency rate rises to 3.9% after strong holiday season. Yeah, strong holiday season, but you guys still lost a ton of money. They completely missed their earnings revenue. I mean, the earnings estimated price per share. I think the revenue was average. I can't remember the exact number. We can look at it real quick, but let's see. The company's earnings materials that Pulse volumes were up 19% year over year, quarter 79.2. Yeah, the revenue wasn't necessarily the problem. I think it was just the earnings per share that they were very concerned with, and also that the number of delinquencies 90 days or more has increased significantly, right? That's a problem. And we knew that this would probably be out of all the cards that are out there, the one that was going to see the most amount of pain. They kind of approved anybody, and that are middle class, lower class individuals do use Discover Card. It's just showing you that the consumers are not as strong as maybe people are anticipating, and they're leveraging debt more than they probably should. And if they are leveraging this debt and they're not paying, and delinquencies are going up and they're rising, kind of tells you that this debt is going to come due at some point. But if they're not able to pay it, then I think we're looking towards a huge debt crisis ahead of us. I just don't buy that the holiday season was as great as everyone's anticipating or expected when we look at stuff like this and the stock drops what I don't even know what Discover's down right now. I think it was 10% or something to start the morning. So kind of painting a bad picture for the consumer to start the year, in my opinion. Any thoughts on on Discover or where the consumer is? Because I think there's a lot to be had here.
Yeah, I mean, I think just the 90-day delinquency rate kind of speaks towards, this could be just the tip of the iceberg. And then I don't think it was Discover. What was the other firm that was down like 1.7 billion in unrealized securities losses?
Is that
That you
Truist?
said right around the same. Hmm?
Is that from last night or is it from a few days ago?
I think it was from like 1 or 2 days ago you sent in, but it was right around the time you sent the Fidelity news. Let me see if I've still got it pulled up here.
Yeah, no worries. You find that, and then I'm going to pull up Discover's chart real quick so everyone can see this massive gap. We love gaps, guys. We love them when they gap down, right? This is nasty. This is on the 1 hour chart, but let's look at the daily. Oof, oof. It's a big move. It's a big move. Just a few days ago, January, no, I guess the end of the year last year, December, we are at 113. Today we were at 98. It went even as low as 96.45 for Discover. It's a big move down. You can see that it's extremely oversold now, but this is the type of move that we need to start seeing in the markets. I think if we do want to see, some type of retraction or I guess correction in a lot of these major indexes, eventually there's a few stocks that are holding up all these indexes. Once they start also seeing pain, you'll see that a lot of these things like Discover, we'll look at Spirit in a second, all these major companies that are just going to get killed this earnings season, most likely, once those in tandem with a lot of these tech companies are keeping up, the S&P and the Nasdaq start reporting earnings, it's not as great. The outlook isn't as great as people are anticipating. I think we're going to start seeing the indexes move, but that's why we're seeing individual stocks, I think, right now move, because we are getting those earnings. But when enough of them do come in and they start working together, I think that's when we're going to start seeing the indexes drop. That's why people are buying these. They're buying the Nasdaq, they're buying the S&P, they're buying the Dow here, because it's like, they still have hopes that we're going to be okay. We're going to get the soft landing, and any opportunity at the price is down seems like a great opportunity to get in the market until it's not. But yeah, did you happen to find that text
So
I sent?
I had the Discover number mixed up with the HSI market open. But I
Oh,
was
the
thinking I
HSI.
just started, yeah.
Yeah, HSI. We can take a look at that real quick too, because HSI had a pretty good night last night, and by pretty good I mean it survived. Right, it was able to get through the night, and it's really interesting to see this historical level of support held. It bounced off of it, but if you look at this on the hourly, the HSI, or even let's go to the 5 minute. You can see how crazy it was in China last night. Like, it actually didn't hold it. It went down, below 15. I mean, at this point it was like 15,186. Finally closed here at about 15,391. So it was up 115 points, about 0.75%. In the grand scheme of things, I don't think it means that much. I mean, just looking at this chart, year to start the year, I mean, we're still down, I believe, 9.71%. You can see that wick right there, so it's holding strong. But I think that there's still a lot of headwinds for the Asian markets, especially China. I mean, not to say anything, but we know we have Evergrande coming up in 2 weeks. It's going to be a very interesting position that they're going to take on that. Maybe they print some more money into the system and they just inject the liquidity, hoping that people are able to stimulate the economy, buy some of these stocks. But even when they told them not to sell these stocks, they still sold them, and that's significantly. And tomorrow's going to be interesting, or I guess tonight's going to be interesting, because they might either buy it a little bit more or it might stay flat. But I anticipate that they're going to start selling off every time on Mondays. It seems like that's the route in which we see the HSI drop significantly. So it's going to be really interesting to see the Mondays open, or Sunday nights open into Monday mornings, U.S. market open. But Hang Seng, man, it's one to watch. I think it's the most interesting stock or index to be watching here, along with the Nikkei, because Nikkei even starting to pull back a little bit here. I don't think it's done. I think they're going to probably go for all-time highs, but when the Nikkei does go, guys, this is all the liquidity that's sitting below it, all these red gaps. It's probably going to fill most of those over the next 3 years. So that's just keep in mind too. And again, higher the Nikkei goes, the stronger the dollar goes. And the dollar right now is staying extremely strong despite everything that's going on, right? I mean, the S&P is up 38 points right now, 245 in the Nasdaq, 187 for the Dow. Dollar hasn't budged today. Really interesting, right? I can't necessarily tell you 100% certainty why that's happening. I mean, gold is down a little bit. I mean, it's bouncing back here today. I think gold is currently sitting at 2020 after going all the way down to 2001. So I think that these structures that we have in the Elliott wave theory are lining up, which is good. But even oil is bouncing a little bit here. Maybe it gets to that 78 and gets rejected. I think there's a lot of things that are just faking out the market right now, and it's kind of hard to tell exactly where we are. And it's like, obviously, right? But I mean, even on like these smaller time frames, I look at the S&P, and before this candle started shooting up, we had a double-legged doji, which is two of these candles. So one that looks like this one, and then one right next to it that looks identical. That's a pretty good sign of indecision in the market and indecisiveness. We also have this double M top here. I mean, it's really interesting to see what happens going into earnings, because I think the earnings are going to be more important than a lot of the technicals going forward. We see these patterns, so it kind of gives us some idea of what's happening, but I'm just not convinced with a lot of the technicals and a lot of the excitement that's coming from these stocks right now. I don't know. Maybe it's just I'm being too bearish, but it's just that's what I'm seeing.
Yeah, no, it's not looking pretty, and that HSI gap is just the thing that worries me. Like I'm excited to check the market open before I go to bed tonight and just see, like, do we start below the historical resistance? Like, I don't know, it's probably unlikely that we start below it, but I wouldn't be surprised to see some more action beneath.
Yeah, I mean, I think there's still, and again, just zoom out on the HSI, and we talk about China all the time, just because I think this is might be the black swan. Again, we don't know for sure yet, but we're almost at the 2022 lows. Go below that. I mean, the next historical level or historical low that or bottom that we could find is literally 2008. So that's it's not a big drop from here. I mean, that puts us around the 30% drop in the market. Say Evergrande or something happens over there where there's a fire sale. I don't think 30% is out of the realm of possibility very fast. I think people underestimate the possibility of how quick you can get down 30% in this market, especially if people are just trying to liquidate for cash. So we're going to keep an eye on that, especially with the dollar staying strong here. The let's look at I guess I keep wanting to calling it save just because it's a ticker, but let's take a look at our boys over at Spirit Airlines because they have been having a bad week, right? They've actually bought the dip a little bit down here. So you can see here it wicked all the way down to 413. It's up a little bit from where it was earlier today. But the reason that this is all happening is because the failed merger between them and JetBlue. And on top of that, we saw that they were considering bankruptcy, right? And that scared the market. I mean, it dropped all the way down. At one point, it was down 30% today. So I'm really excited to see how this plays out. I think a lot of people are buying these dips, and this might be a good lesson in the short term. It's like, why you don't fucking try and catch a falling knife. Um, and again, it kind of shows the consumer is not in the greatest place, right? If Spirit Airlines, which is the cheapest airline out of them all, is having issues, then what does that tell you about consumers wanting to travel, right? I'm really interested. Like, don't get me wrong, Spirit's one of the worst airlines in the world. I absolutely understand why people wouldn't want to be using Spirit Airlines, but this
It's
could
all the
be
hidden fees, honestly.
it is like the stupid bag fees, and obviously you're sitting on literally what feels like a public bus bench when you're flying from I don't know from New York to Vegas or whatever fucking Spirit long ass flight is $200 at the ticket value, but then next thing you know it's $380 after you pay for you and your friend's bags. But despite that, I hate Spirit, but despite that, people are just trying to buy these dips. People tried buying it the other day at 791. Well, guess what? It went down to 413. They're trying to buy it today at 562. Guess what? It's not over yet. So I think people are going to get a rude awakening with this. I think this could be, I've talked to some of you guys, this could be start some of the bankruptcies. I think that could be happening because I think there are a lot of bankruptcies that are going to be coming, especially after this earnings season. I mean, if the numbers aren't great, I don't necessarily expect the stock to react as well either. This is 70% down at one point in a matter of 2 days, right? It was down all the way to about 73, 74%. Imagine if any other company just says, we are fucked. Don't expect that you're not going to see something like that because it's very possible some of these smaller companies could absolutely just drop, even 40% if something bad happens. There's a lot of, I mean, even Johnson and Johnson, I know that they were even mulling over a potential another bankruptcy. Anything could happen in this market. Just something that we have to keep an eye on, stay vigilant. Let me just take a look at one thing real quick. Oh, we forgot to talk about Truist Financial. So that was another one that we've always talked about, that they were a very scary bank with how much they have exposed to FHLB in the short term. And again, most of it was 1 year or less, so a lot of that had to be paid back. You can see that they're starting to turn around a little bit here too. They pumped at the beginning of the market, but now they are down about 0.75% on the day. There's there's a question here in my heart that maybe there is one more move to the upside for the banks before everything just starts to collapse. I see a potential wave 5. I just don't know if I don't necessarily know if it's going to be as slow on the way down. I think that's the important thing here. A lot of these companies are missing their earnings per share, their EPS, but they're beating on revenue. And it's really interesting how the markets aren't necessarily taking that into account. They're like, okay, yeah, sure, let's just trade this, but it's not trading in a great range here. And we know that the banks are at most risk for a lot of these loans that are going bad, both in CRE. At the same time, a lot of unrealized losses that are starting to mount. We saw that Moynihan, the CEO of Bank of America, saying that he expects rate cuts to come this year and next year. He expects at least 4, and says that the Fed needs to cut rates. And that tells you that, and again, we know Bank of America has some of the highest unrealized losses in the game right now, that these banks need these fucking rate cuts sooner than later, right? Yeah, so I think that the inflation, the bond market kind of pricing in, oh, maybe we're not getting these rate cuts soon. It's causing a lot of turmoil for these banks because, again, if they don't expect that the rates are going to go up, then guess what? The yields are going to go up, or the rates are going to come down, then the yields are going to go up, and that just amplifies the unrealized losses for a lot of these banks even further. So we're in a really tricky state right now. That's why I said there's so many head fakes. No one necessarily knows what happens. I think it's a higher possibility that we see some type of black swan that scares the market. Not even like 30%. I'm saying like at least 10%. And that kind of gives people the idea of like, oh, okay, this is where we actually are in this market right now. We need to be wary of that. That's what I think we kind of need to see. But I'm not convinced we are there just yet. Maybe it's March. Maybe something happens in earnings season. Who knows? But it doesn't seem like the banks are in a good place right now. And even if the earnings do come back mid, I think that they're going to come back even a lot worse once we start seeing a lot of those layoffs and people afraid that the banks could be in more trouble. All right. Let's see what we got here. Have you been keeping up with stablecoins at all?
Not so much. I know as the RWA tokenization conversation has heated up, there's been a lot of people talking about stable coins as like the first test of an RWA, and still banging the drum of, kind of what we've been speaking on a good amount of. There needs to be, very clearly defined and regulated actors for stable coins. Because, at the end of the day, if this wants to represent, a national currency or, a euro, it still kind of needs to abide by them to a certain point. But no, I haven't been keeping up as much with, True, FD, or anything else like that.
Yeah, I mean, pretty much it's just what we're seeing on the chart is what's been happening a lot lately. We're seeing these depegs and they wick down, they wick back up. The true USD depeg on Binance necessarily hasn't came back yet. It's at 98 cents. It went all the way down to what was the low, 96.85. And again, people are like, well, it's still close enough to a dollar, right? You say that, but then think about any of the trading pairs that people might have on Binance, not in the US, obviously, but say Binance International, someone's got a Bitcoin short going through, and next thing you know, TUSD is depegging a little bit, and that cuts into your profits, it also cuts
Well,
into your liquidation levels too.
and like
So
it, even if it's only down, a few cents, it's like, well, then it's not a stable coin. The whole
exactly.
point is it needs to be pegged within like 0.001 cents to a dollar, and preferably up, not down, right? Because that was a lot of the early argument from politicians. Is if you look at any stable coins graph, whether it's USDC to USD, whatever, and Silicon Valley Bank, Signature Bank aside, USDC, I've got it under 99 cents a few times, and like there shouldn't be a benefit to longing or shorting a stable coin, right? Whereas like hypothetically, you long with enough size on that T or on the true USD, like it's down a cent and a half. And the concept of $1, 1.5% leveraged 100x. I mean, degen's gonna degen.
Absolutely, man. And we saw that with back in Silicon Valley too. Like I think
Mm-hmm.
USD on some exchanges went as low as 88 cents. Some it went even lower. It
Yeah,
was
yeah, it went down as low as I think 83 cents was as low as I heard people get in on that.
yeah, and then I think Binance or some other exchange, probably one of the Tether exchanges, one of the smaller ones. I think it went down as low as 36 cents for like literally on the 1 second chart, and then it just bounced all the way up to like 75 or something like that. But again, yeah, that's all exchange machines that were able to get in on that. But the thing is with this right here, and I'm looking at USDT with on the USD pair for Coinbase, even this is depegged a little bit, right? And it's still enough to the point where it's like, okay, why is it being depegged? This is supposed to be a stable coin, supposed to be one to one. I do know that supply and demand on these exchanges impacts that significantly. That's probably why people should be using the treasury. However, people don't use the treasury. They just use the exchanges as an onboard and off ramp for their stables. But, I don't necessarily
Well,
like seeing stables depeg at this level right here, especially as Bitcoin's selling off. You're going to say something?
yeah. Well, I was just gonna say, I mean, I think a lot of it, at least right now, has to do with just the massive volatility and on-chain trading usage, and that's what it's coming with, as well as just the advancement of with Coinbase specifically adding in futures.
Mhm.
Like I think honestly, it not only places a higher, what's the word? Not only should USDT be more vigilant of it, but Coinbase at that point as well, or any other exchange, should be over collateralized on that to make sure it's not depegging on your platform.
Yeah, completely. And then it's really interesting too when we look at how FDUSD's market cap's going up significantly, and then now they're above the peg, right? And and we found out that FDUSD was also being used to back BUSD on Binance. There's a lot of stuff that's going on right now between Binance on the Tron network, USDT. It's not huge sums of money. However, it's enough and enough volume and repetitive transactions to the point that we are seeing these constant depegs up and down, primarily down for a lot of the crappier stable coins after USD. It's a crappy stable coin, but I'm not necessarily going to say that, this at one point, this was the top traded stable coin on Binance, right? Against Bitcoin. So it's really interesting seeing that. But I think that a lot of this is coming from those exchanges. We're going to see how this plays out. Again, I think a lot of the games are coming out as we get closer and closer to CZ sentencing in February. So I think they have a pretty short window before people start selling off, before CZ starts naming names if he wants to, see the light of day in his 50s, maybe. I'm not sure if he will. Some people want to put him away for 18 years, so we'll have to see what he has to say. But yeah, the stablecoins right now, continue to stay vigilant on those. I am not convinced that they are so stable. I don't think you believe that either. But that's going to fuck up some trading pairs, and especially if Bitcoin starts to be more volatile, that's a dangerous play, I think, in the market that not too many people are talking about. Before we get into Bitcoin real quick, because you brought up Coinbase. Coinbase went all the way down today to 124.33, continues to bleed. I think these products that are related to Bitcoin as Bitcoin dumps are going to continue to dump. And I think a lot of people are excited about the ETF and Coinbase. Just to roll down to the ETFs real quick. IBIT's down to the 23 handle. ARK is down almost. It looks like it's heading for 39 at the next coming days, unless Bitcoin decides to bounce. Your favorite HODL down 4.5% today. Where's our grayscale buddies at? 4.53%. These are not doing great to start off the year. Everyone was really excited about these. Bitcoin's not doing what they wanted. Well, that's what happens when you're playing with derivatives in the market. I don't care. These are you're betting on the price of something without actually owning the asset. You're getting a crypto exposure that way. Good fucking luck if you are able to make any money in that and with those products right now. So just something we had to touch on. Let's take a look at some crypto and then we'll just wrap it up for today. I think we've covered pretty good ground. So looking at Bitcoin right here, obviously it's dropping significantly. I think the 4-hourly chart was the one that kind of gave us the idea that it would drop. I mean, it was perfect, right? I think we talked about this yesterday, consolidation sideways, and then eventually, the death cross coming on the 4-hourly, didn't pump into it, got rejected and went down. Now we're just looking at this in terms of how it's playing out. I can't necessarily tell, maybe on the hourly, looking deeper, see how this is in terms of the wave counts. I mean, this could be wave 1. I don't necessarily see a wave 2 bounce. So this could be wave 1. This could be the bounce, wave 2, and then we could be starting wave 3. I don't believe that. I think that this is more likely that this is an ABC corrective pattern. So maybe A, B, C, maybe a pump up, and then we finish off whatever structure that we are building on the daily. And again, daily is an absolute mess when you look at this. So I'm not necessarily getting too caught up in the wave counts there. But I think that there is going to be some type of bounce for Bitcoin, probably in after hours, not going to be when the market's open. But eventually that's going to cause Bitcoin to maybe allow people to distribute from higher. I think that's something that you and I both agree on. Any other coins you want to take a look at?
Yeah, I mean, I think every coin's kind of following Bitcoin right now. Every coin that I have on my trading view watch list is currently in the red. The only coin that's green is USDC.
That's a good
And it
coin.
is above $1 currently. And that's what we like to see. Actually, yesterday it went as high as 1.016. I mean, I'd love to see that. You can call that. I mean, it's not necessarily still stable, but I'd still rather see it higher than $1 than below any segment of $1.
Let's put it this way: if you were holding USDC, it is moving in the right direction at that point, especially compared to a lot of those other crappy unstable coins that we have in the market that for some reason were the top traded stable coins in the months of October and November on certain exchanges, Binance. Chris, ETF staying -4%. Burr hit -17. Yeah, man, it's getting bloody out there. I think your call with Biddy and SETH or Seth, I guess, the inverse of those price actions of Bitcoin and ETH are pretty good plays right now. Let's take a look at what those look like because I'm not necessarily too worried about alt right here. Let's see, yeah, 5.5% up today for Biddy, good move there. And then if we take a look at Seth, you can see that that's also up 4.13% there. It's bled a little bit in the days coming here. Obviously, ETFs, if Bitcoin's prices or ETH's price are going up, those are going to bleed out. But if you do catch the right time in the market, those things are probably just going to print money for a period of time. I'm not saying getting into those right now. I think, Chris, you got into them at a good level. But, I'm
This
really
is going to
interested in
sound like a really dumb question,
yeah.
or maybe it won't, because I've never used Robinhood. I'm just going to put that out as the context to make myself seem less dumb. Can you short or long, like, can you trade any form of futures on crypto on Robinhood?
No, I think it's only
Okay.
spot. It's
Okay.
really
And that was,
shitty. Yeah.
yeah, because that's what I was going to say is otherwise, like, I can see someone who's not, you know, already having a Coinbase account or an exchange account with futures available, just doing this if they're anti-crypto or think crypto is going to go down. But like, if I buy ETH, it's going to go down, and I want to short Ether, man, I'm just going on a Perps exchange or a Coinbase futures, and I'm just hitting the sell button. Like, I'm not, or I'll just short it straight, derivative style. But I don't know why I would go buy a short Ether ETF unless I was just, throwing down a bunch of money.
Yeah, again, the gains aren't necessarily that great. 5% here, 5% each day. It's not bad, but I'd much rather. I miss shorting crypto, dude. Like it was so much fun this summer, but I just can't. Again, with these stable coins doing what they're doing, it's just something that I'm terrified of. Right? I don't want to be right and still lose. That's the worst scenario possible. And with Coinbase and everything like that, I might get in if Bitcoin does pump because again, I still think that there's going to be a pump here. A lot of people are saying that we're going straight for 34K. I don't know. I still think there's a lot of Bitcoin out there that needs to dump, right? I think I saw something that Grayscale had like 700K, 700,000 BTC, and we've seen a ton of it just go flying out to Coinbase. And we're talking about like half a billion dollars worth of Bitcoin that's been going on to the exchanges and lots like that. So I'm not necessarily convinced that the dump is just beginning. I do think it's beginning, but it's not to the point where it's going to come harder, right? I think that right now we have a little bit more room to the upside in the short term just because everything is oversold. I mean, let's look at that right now. But we'll wrap it up on the funding rates because the funding rates are going to be important to see how the price action reacts. But I completely agree, man. I same thing with crypto. If you want crypto exposure, buy crypto. If you want to short crypto, probably short crypto on a crypto exchange or something, or a DEX or some way where you can actually be playing directly into that. Let's pull this up here. I think that's the way we're going to maximize gains too. But across the board, we can see that the funding rates aren't necessarily that great. Everything seems pretty flat. BNB, a lot of people are shorting that across the board, maybe a squeeze there. This here seems like it's pretty heavy, to be honest, or neutral. Red means people are going max long. White means that it's pretty neutral, meaning people are not going in either direction. I don't see anything concerning here. Maybe on OKX, people are going a little too long on Bitcoin, but maybe they're also anticipating the pump that we are anticipating. And market makers are just like, nah, screw you guys. We're going to make it pump from 35K straight up. But I don't necessarily see that. Let's take a look at the liquidation map real quick, and then we'll call it a day. Let's see the 30-day. Yeah, I mean, there's a ton of liquidity that's just sitting north of us at this point. And then we look back down here, there's not necessarily too much. I'm not saying long Bitcoin. I'm not saying that at all right now, but it seems like we could be getting to a point where those funding rates can turn like that. And next thing you know, we're going to be liquidating a lot of people to the north of us.
Yeah, and I mean it's tricky too, right? Because you long at the wrong time. Like, it's so choppy that if you would have longed this morning, you didn't have enough size or you didn't have a tight stop. Bitcoin's at 42K. It's down to almost 40K. So if you're not doing things correctly and you're not experienced doing it, So yeah, don't mess around with it. And that goes back to what you're saying with the stable coins is like, you're in the belief that the market's being manipulated and you don't want to mess around with that game. And this is the same kind of deal, right? It's like you don't know whether or not you're going to get wiped out just to get that scam dump right before a massive pump up. So it's, unless you're very convicted and you know exactly, or you think you know exactly what's going to happen, it's like I'm doing some small scalps here and there, but even that worries me on the occasion.
Absolutely, dude. You know what I really wish? I wish we had a market very similar to what Binance or Bybit or any of these other crypto exchanges have that offer futures, but everything was on USDC. I would feel so much more comfortable, I think, trading in the market still if that were the case, because worst comes worst, it's like, all right, I think USDC is going to be fine. I think that Circle is going to be, applying for their IPO fairly soon. Now that we got the ETFs, I think that there's a safer bet in terms of shorting the market, but still being able to make those stupid gains, 3 to 10x returns on, shorts or longs that you open. But we're just probably not going to get that for some time, I think, in the US. I think our international markets are going to have the opportunity to see that, especially if, say, something happens to Tether and USDC does become the top stable coin, I think, for most exchanges. But, these are things that I want that I probably will never get. But yeah, so I have nothing else to say here. I'm just rambling at this point. Anything else you want to look at or take a look at before we head out, man?
No, I think that's pretty good for now. Yeah, it's a great show. Thanks
Sweet.
for having me on.
Always, dude. Always a pleasure. We got to get you, me, and Jay Webb on here together so we could have a, I'm not gonna say a 3-way, but we could have 3 guys on and we could be talking about the market and see. Hopefully there's a day where the market's just dropping like crazy and we're all just like, fuck, it's not stopping. That'd be a fun one to do. But that's gonna wrap it up for today. We'll be back tomorrow for the weekly close. Chris, always a pleasure having you here. Randy. Actually, no, I'm gonna show this Randy one. Randy, thank you for being here. Chris, thanks for being here. Everyone who's watching the recording, we appreciate you guys always being here. Stay safe in this market. And yeah, keep an eye on the Hang Seng tonight, and we will see you guys next time.